Welcome to the Block Fuel Podcast, where we sit down and speak with thought leaders in the ever-changing world of digital assets. So sit back and relax, because another episode of the Block Fuel Podcast begins now.
Ladies and gentlemen, welcome back to the Block Fuel Podcast. Joining us today, we have Tad Smith. We had met in the most serendipitous way about, I think it's probably been a month or so ago. We both had hopped on a call and we had no idea how either of us had scheduled the call. And so I sat there and I was like, oh, well, we have to see why we're on this call. This is meant to be for some reason. So I learned very quickly that Tad is beyond accomplished. He is a graduate of Princeton and Harvard. And he was the CEO of both Sotheby's as well as Madison Square Garden Group. Now you're leading the fine art group as well. So you're kind of the modern day Renaissance man, if you will, Tad. Welcome to the Block Fuel Podcast.
No, not Renaissance by a mile. But boy, I really do want to figure out how we ended up karmically on that same Zoom when neither of us remembers it. It's an amazing story, actually.
And then we had the opportunity in New York. And so it was awesome to actually meet you in person and met one of your friend's sons. It was a great time. So
yeah, and speaking of sons or kids, period, that's before you were dad.
That was before I was a dad. So I don't know if the Block Fuel Nation knows about that, but I'm a 3-week-old dad now.
Well, don't edit that part out. That'll be the highlight of the whole podcast. Come on.
Exactly.
Jody, how have you been holding out on him? What's the deal here?
Yeah, I mean, I have a 10-month-old, so it's been me describing.
Oh, I love it.
But now he can celebrate it.
He's teaching me the ropes. So Tad, you don't just become a CEO out of the gates, right, when you graduate. Can you give a little bit of more background and got into this, role of leading some of these premier companies?
Yeah, well, it's interesting. I should say that I was born in North Carolina and grew up in Colorado. And the reason that's important is I'd actually never been to the Northeast at all, not once. But got into school in New Jersey and went there. And I'll never forget. I mean, it was an April thing and it was dark. And all I could think of was it was like landing in mortar, which is kind of crazy. But went on to have a really good time in college. And then out of that, I went to New York City, essentially to join Wall Street and went to work at JP Morgan. This is 1987. And for those of you who know Wall Street's history, the market crashed in 1987, famously in October. And I'll never forget that because I was actually on one of these like teen camp things. They take you out to the rural part of New Jersey. I'm in the training program, and we come back. We've been running around doing these games, like climbing, like the games they get all these young trainees to do. And we come back to the lodge, and I remember it was April, but it was sort of dark, getting dark. And there was a payphone. You guys won't know what a payphone is, but there used to be things called payphones. And there was a long queue of people that were standing in front of the payphone. I'm walking, what the hell's going on? And the market had crashed 20%. And that was my baptism on Wall Street, if you will, in 1987 in October. And so between that, I went to work on Wall Street, then wanted to do some nonprofit work. So I went to work for the Rockefeller Foundation, and that was pretty fun. And then my boss had to leave. And so I then went into the government. I put a resume in and got an introduction to what was then the chief of staff of the chairman of the Taxi Commission in New York City. Can you believe it? And I actually joined as the community affairs officer and the chief of staff of the Taxi Commission under then Mayor Dinkins a million years ago. Or maybe it was Koch. I can't even remember. Whoever was there was in 1987. And that was wild. And then the administration changed. I think that's when Dinkins is coming in and we were Koch people. So we were going to be tossed out after the primary. And I had $800 in my pocket, and that was it. And so I put an application in Harvard Business School. It's the only one I applied to, the only one I could afford, and meaning to apply to. And I couldn't afford any of them. And that's where I went. I got accepted, but then I had 9 months of nothing to do. So I went to work for my roommate's consulting firm called Oliver Wyman and Company, and then went back over the summer and made enough money so I could start, and then got through school, and then went to McKinsey. Had a really fun 4 years at McKinsey, and then decided, I think the client side's more fun. And so I jumped to what was then called United Dutch Publishing, which is Billboard. And that was the client. And so it was the largest provider of media group. It had the Billboard charts and all the other things associated with it. And that was the client. And I liked it, but the client there said, hey, I sought a gig other than just to be a consultant all my life. And he said, I got a guy named Strauss Zelnick that really you ought to meet. At the time, he had just taken over BMG, the music company. And so I put a resume into him. Strauss had me up to New York to talk. And lo and behold, I'm in the music business. And this was years ago. So I've been in the music business. I've been in hotels. I've been in the media at the intersection of digital technologies and media and all sorts of businesses for many, many years. And then got recruited to join Cablevision, which was then controlled by the Dolans, who also, of course, are famous for Madison Square Garden. And they moved into the CEO role at Madison Square Garden after 4 years. And then I was recruited to Sotheby's, which I then sold in 2019. And since then, I have hung up my CEO spurs and now am in the business of investing, which I love, coaching incredible entrepreneurs like you two, and helping in the world of crypto, technology, blockchain, all sorts of alternative assets. And I'm chairman of the board of the Fine Art, which is the largest art merchant bank in the world, based in London. And the dynamic founder CEO there is a guy named Philip Hoffman. So I've got incredible entrepreneurs like Dan Tapiero, who founded One Roundtable Partners in 10T, part of the day. And then part of the night is with Philip Hoffman at the Fine Art Group. And so I really pinch myself. It's a great life.
You really are truly this modern day renaissance, man. Clearly you're working across multiple different industries. You've been in music, you've been in art, you now are in crypto. What would you say just overall for anyone listening? How do you approach that when you first jump into a new company, soaking everything in like a sponge and maybe making decisions when you fully don't know the industry quite yet and getting to that point?
Yeah, this is a really, really good question. And what I want to do is let's take two examples. Let's do Madison Square Garden and the music business. Now, Madison Square Garden has a significant music business, but let's just do like the traditional music business. And I'll give you an example. Can we agree, for example, that if you are in the HR department, you probably have enough depth inside your functional area that you can transfer across different types of industries? Generally speaking, that's true. Most good HR people, you can put them in. They need, and very quickly they'll learn how some of the non-HR stuff differs, but the HR, they have such depth and strength in it that they can move around. Same, by the way, very often with chief financial officers. You'll see chief financial officers, maybe not so much ones in banks or financial institutions because they have some unique qualities, but the CFOs can move from business to business to business. The same often is true in related businesses, and a lot of the ones that we just talked about are related with digital technologies or digital technologists, or sales, running sales organizations often rhymes, running marketing organizations often rhymes. What doesn't rhyme? If you are shooting hoops or hitting the puck into the net, that's the front line of Madison Square Garden. You can't wake up tomorrow and decide you're going to be a musician. So the key thing to think about is I was able to move among various kinds of industries because in my earlier years, I had gotten training and done a lot of work in things like how to sell well, how to apply digital technologies to transform businesses, how to do marketing, how to do those things. And then, so I would learn a new front office a la hockey or basketball or music recording or art sales. Mm-hmm. And that was always incredibly fun. And then I would try to stick to my knitting on the things that I knew from the functional side that I brought from other places.
I think even through this process, like you're going in and you're having interviews with people, say Oliver Wyman, you're McKinsey, and then as well as like you go in, you take a leak in the media space. How would you go into those interviews and like without any background in it, display aptitude? And what would you recommend people when they are in a situation where they're, hey, it's a new industry, I'm switching, I need to go in and be confident. Do you have any thought spaces that you get into, or like, do you have any stories that you tie to that say, hey, this is going to apply to any business that I'm in?
Yeah, I do actually. And there's a very real case. I mean, I remember the conversation about Sotheby's, because remember at the time I jumped to Sotheby's, I was the chief executive of Madison Square Garden. And you wouldn't think that sports, by the way, then Madison Square Garden also had the cable properties in it and the Rockettes and all that stuff in it. And you would have thought that that was a really far leap to get to Sotheby's. And so to your point, Jody, what would be the conversation I would have? And the key message here is play to your strengths and draw connections between your strengths and their needs. In this particular case, at Madison Square Garden, Madison Square Garden was a publicly traded company. It was a complex, creative business with lots and lots of big personalities and interesting people and all sorts of robust things going on. Incredibly valuable business. And crucially, very creative business. And then when you look at Sotheby's, the conversation there was, hey, you need a safe pair of hands running a public company. Running a public company is very different from running a private company. You've got to have high standards. You've got to understand how to deal with shareholders, all that. I've got that box. But also, I have lots of experiences in creative parts of businesses. I am not an art expert. Nobody's going to buy a piece of art on my recommendation. But I do know how to manage creative people. I do know how to figure out how to make sales forces do better. I do know how to market. And oh, by the way, I have 20 years of experience applying digital technologies to legacy businesses. Maybe those are things that are of interest to Sotheby's. The answer, of course, at the board level was yes.
So that's a good segue, actually, because I remember I was listening to some podcast, I think it was several years ago now, and they were talking about how when the birth of kind of NFTs, right? And you never think that Sotheby's, traditionally 100+ year old company would start getting into that space. And what I found really fascinating, and I don't know if it was your quote actually now looking back at it or someone else within Sotheby's, but they were just so surprised with all the new people that were coming in, right? Because traditionally there's only a handful of people that are buying these $10 million pieces of art, I'd imagine, right? Where with NFTs, did that start to introduce the new up and coming wealth? And how did you deal with some of the challenges? I don't know if the board was pushing back on getting involved with some of that.
No, so the NFTs came after I'd sold the company.
Okay.
But crucial elements were in place before. For example, we had a conversation internally about whether we would accept Bitcoin. Then it was Bitcoin, but we didn't even go any beyond Bitcoin in exchange for art. And we decided at the time it didn't make sense to do so. Probably the wrong decision. But what we had done is apply a lot of technologies to Sotheby's that would then yield tremendous results when the pandemic came down the pipe. Including, by the way, we actually bought a small AI company and had actually begun to develop technologies that would look at matching art to clients or creating pricing databases that were algorithmically driven. And so there were all sorts of interesting precursors to it. But Avi, the one thing I want you to think about is if you take the perspective of hundreds of years for just a minute, the appreciation that the young people have now for NFTs is no different from the young people and any phase of art because it's the new. Mm-hmm. And often the new is a disruption to the older generations and the more established kinds of art. There was a time when Leonardo da Vinci was new. Mm-hmm. And he appealed to, the avant-garde royalty or the specific, or the particular popes that were wanting to change things. The art is always about the new displacing the old, if you look with enough history. And there's this wonderful, wonderful place called Chatsworth in the UK. And it's essentially 12 generations of dukes that have collected contemporary art. And so of course, now 12 generations, they've got 500 years of art, and all but the latest 20 years of it is what we consider modern or pre-modern or Renaissance or modern impressions. But it's actually a collection of 500 years of contemporary art. Same is true of NFTs. NFTs are currently on the outs. They will come roaring back when liquidity arrives. It hasn't gone anywhere. It's just dormant.
Art's one of the areas where it makes sense from a blockchain perspective to prove the authenticity. And it's kind of interesting now because that's what I've started to see a lot of. And I say this on every podcast, so maybe I'll edit this out. But, these pictures of cats were one thing, right? But then there's the Beeples of the world that are producing like phenomenal artwork. I don't personally love like the AI generated where there was no work necessarily involved with it. And I think the users, you see some of that still on Twitter where people are hyping some of that stuff up, and the communities are kind of interesting where people will get behind this little doodle, or something like that there's a lot of people and there's millions of dollars behind that. So I don't want to dismiss those altogether, but where do you see NFTs moving? You said they're going to come roaring back. So would you say it's going to be more of the Beeple, the true, what I would call, I guess, like artistics, or do you think it's going to continue to be around these DAOs and communities?
Yeah, it's a really good question. And the short answer is I'm really not sure. But the one thing I'm pretty confident in saying is that liquidity will return to the market soon. It's already starting, by the way. Mm-hmm. And when that does, at the moment, when liquidity drains out, there's no capital involved, and therefore there's really not a lot of money fueling creativity and innovation. And that's one of the problems across the system right now, which is there's no money. When money flows back in, you're going to see an explosion of creativity and innovation. And you're also going to see a whole new element that was not true 3 years ago called AI layered on top of it, and particularly generative AI. And I think you're going to get unimagined levels of creativity and new art conceived coming out. And there are all sorts of little interesting tidbits of that around, but I think we're going to see something really, really special. The human brain doesn't contemplate asymptotes. It doesn't contemplate exponential growth very well. But in art, you're going to see an explosion of creativity. And interestingly, and this is more controversial, not all of it is going to be created by human beings.
That is a quote. That's going to be one we snip and replay.
We could talk about some big themes if you want to, but
yeah, I'd love to.
Well, from the perspective of my life, I'll tell you, I sat my 24-year-old son down the other day, and by the way, the good news for you guys, if you don't want to hear this, you can edit all this out. And I took him to lunch, and I said, what would I want to know today, based on everything I know now? I'm 58. If I were 24, and I said, and I took his name's Harrison. It's amazing. I took Harrison to lunch, and I said, listen, there's some things I really want to talk to you about. He says, well, what, Daddy? And I said, the first thing I want to give you is the insight that you're 24, you're going to live 100 years. And he pauses and he says, what? I said, unless you mistreat your body, unless you're incredibly unlucky, you've got 100 more years. And you're 24, you're going to live to be 100 years more. Now, the other thing is you've gotten your vision, you come down to Palm Beach and see all these older people like Daddy, and you say, oh, well, I'll be in a wheelchair. Most of your 100 years, you're going to be completely switched on and able to work and contribute and be a meaningful part of society. Think about that. And by the way, Jody and Avi, it applies to you too. You've got probably 90 years for each of you still to go. So keep that in mind. I said, so that's one, which means everything you're doing now, you need to be thinking about the next century. Now, the other thing to think about is, both of you guys can do this. You're sitting there in New York. What did New York look like a century ago? How different is it from your daily experience today? A century ago was 1923. It had horses on the streets in 1923. So when I say you need to think about your life from 100 years perspective, I'm talking to you two, because 100 years is not going from today is going to look mighty different. And by the way, we're talking about exponential growth. So that's one. Number two, I grew up in a world where data was expensive and costly. Data was everything. Guess what? Data is everywhere. The supply curve on data is shifting out. And we know what the value of data when the supply curve shifts out infinitely is. It drops to zero. Number two, I then made a living as a consultant and other things on information, which is essentially taking lots of data, integrating it in a way that creates action and value for people. Surprise, surprise, in the world of the machine, information is superfluous, not even superfluous, it's everywhere, absolutely everywhere. And we're overflowing with it. And so the value of information drops to zero. Think about that for just a minute. The value of information drops to zero. Now, let's pivot to how we got on this topic, Avi, content. Yeah. I grew up in a world, by the way, much of my life has been in creative businesses, in the businesses of connecting great creators, great human creators, to people that appreciate or are willing to pay for their work or whatever the case might be, and all sorts of different versions. Well, now we have machines. They're going to be able to create work. And that's a really interesting time, because what happens when content shifts, the supply curve shifts way out to the right. Now, if you listen to people on the media, what you'll hear is they'll say, well, there will always be an appreciation for human created content. I, for one, hope so. But the truth of the matter is, do we really think the machines aren't going to figure out the music that Tad likes more than any other music? Are we really going, have you sat down with ChatGPT? I have a very dear friend who lives in Aspen, and he and I spent 40 minutes on a Zoom together one time doing a story using ChatGPT. The storyline was amazing. And by the way, it's kind of amazing. You can just whip up a story, change it all tomorrow, change it this. So what does that mean? That means the supply of content is going to shift out to the right. Think about what the implications of that are. I don't really want to, because it's kind of terrifying to me, because I love art. But what it might mean is that the nature of art begins to change in ways that are not yet. And by the way, art, music, film, television, all of this stuff. That's pretty profoundly powerful. And then there was one that absolutely changed. And, meanwhile, my son's got like eyes like this, right? And he's like, wow, dad's kind of really, going off here. But he was riveted. And then I said, so what is the role you're going to play for 100 years in this world? And the one other thing I want to say, this completely confounded me when I suddenly came to this insight, because most of my life I've been truthfully a little bit skeptical of the fact that fossil fuels are going away anytime soon. And I think saw sometime on CNBC, I think recently, there was a projection that the peak year for fossil fuels is 2035. I no longer believe that. I actually believe energy transition is going to accelerate because we're going to have machines that are solving the battery storage problem. And we're going to have machines that are balancing the grid. So think about what happens when energy shifts way out to the right. Those are profoundly powerful changes that human history has never seen before. And they're all going to happen, not just in your lifetime. They're going to happen early in your lifetime. I don't know what that world looks like. I'm incredibly jazzed about it for you. And think about and by the way, in terms of productivity, when you think about the economy, what you do is you've got the number of people times the productivity per person plus debt equals the GDP by and large. Imagine what happens when you can add infinite numbers of robots to do work. What does productivity do? Explodes. So that was my lunch with my son. And I said, look, you don't have to believe anything I just said. You can disagree with any one of these 6 things. That you're not going to live to another 100 years. You're going to live another 5. I don't know, whatever you don't disagree with that. But whatever. What I want you to do is have a view of macro in that world. And you all, particularly since you're going to be in it, should take a position. You should take a view. It's not like when we were young. When we were young, you didn't have to take a view. You could go with the flow. Now you guys need to take a view. And that view needs to have a point of, how do I fit into this in a way that creates a flourishing life for me and my family?
You brought up a good point, talking about the productivity just flying through the roof. My fear, and people have brought this up, is do robots start taking a lot of these jobs, right? Maybe you worked at MSG and you had 30 people on your marketing team, 30 people on your creativity team. As a CEO and as a board member, shareholder, it's great to not need as many employees. But what do you think that's ultimately going to happen to a lot of these? Humans aren't just going to disappear overnight, right? Are we going to have everyone on some kind of UBI as robots start to take some of these basic roles?
So first of all, let me start with, I don't know. And by the way, I'm a great devotee, for what it's worth, for those of you who, I think Raoul Powell is an incredible person to follow, and you can learn about this stuff here. And with particular respect to that, remember that the first thing that's going to happen is that the machines are going to make the people far more productive. And that's an important point, because that means the wealth will be increased significantly. Meaning a lot of the noise we have in our society right now is because we're struggling with massive debt and we can't pay for all the bills so we have to print money and devalue the dollar, and that will come to crypto and 1RT and all the other things in a bit, I'm sure. But what I want to see is that when this begins to happen, the aggregate wealth in the society will rise. How we use that wealth is a different question. And I'm hopeful that we will have a really thoughtful consensus on what to do there. I worry we won't, but I'm hopeful. Having more wealth to discuss is better than having less wealth to discuss. That's a harder conversation to have. The other thing I would like to say is that I think human beings throughout our entire evolution, frankly, have had an incredible diversity of human experiences. Some of them have been, by our standards today, harder, and others have been, by our standards today, pretty good. And the one thing I would like to say about that is that the ability to have human-to-human contact and human-to-human experiences and create and express yourself as a human being, that isn't going away. Yes, we need to figure out how to do that. A lot of us have done it by work. And I think the notion of work could evolve in ways that create human expression of our contribution to the world, human-to-human connection. All of those things will become more vibrant, more powerful. And frankly, you even see it in the modern media world. I mean, who would have thought 20 years ago, or even 10 years ago, that there could be something called a social media influencer? I mean, think about what that really is. A social media influencer is someone who's trying different products. By the way, that's a hobby, right? It used to be a hobby. Right. And then, by the way, saying this one works and that one doesn't work, and this one works and that one doesn't work. And by the way, millions of followers later, you are taking what was essentially a hobby and trying different things, or call it shopping online, whatever you want to call it, QVC for the modern era, and you've created massive communities of interest around it. And that job didn't exist. So it's not, and by the way, I'm not even sure I would call it a job. Mm-hmm. It's a way a person can be compensated for being human. So I'm very optimistic. I think good things are going to happen.
Some people say blockchain itself, one of the killer features now that's becoming apparent is really tracking authenticity across a lot of the AGI and AI generated art.
Yeah, that's a thing. Totally, Jody. Go ahead.
How would kind of like in your own investing with like 10T or One Round Table, have you guys like thought about applying that and like finding projects that are like tagging things or tracking things in that manner?
So One Roundtable Partners and the predecessor funds 10T, my wife and I are limited partners in 10T1 and 10T3, and also we're co-investors in some investments in 2. And also I've been an advisor to that, and now I'm a partner there, but also a general partner in One Roundtable, which is essentially the successor of Fourth Fund. The reason I say that is I can't tell you a more exciting and vibrant thing to be doing right now than to be looking at the explosion of innovation with how blockchain is being used and the intricate and the weaving in of things like AI and the various use cases. To me, it's incredibly exciting. And we're a growth equity fund. We do very little to no venture at all. And we're all about companies that generally around the world, by the way, 2/3 of the companies outside. And so we generally look for companies that are 30 million or more in revenue so that they're beyond the little baby phase and they're into something pretty special. And those are the ones we like to invest in. And in that zone, the amount of innovation going on, and even below the zone that's on the way up, Jody, it's extraordinary. The other thing that's kind of interesting that I didn't realize until I really got into it, my partners are amazing, and was that in the United States, we sometimes think, well, what's the use case? The truth is the massive number of use cases around the world is extraordinary, including, by the way, with Fortune 500 companies here. But the other thing that's amazing to me is, oh my gosh, if you're from a country where your currency has no stability and and could constantly be devalued or threatened, mm-hmm. or you can't get a bank, or you can't transfer funds, or you've got a family you can't send money to, the idea that all these different blockchain and crypto technologies don't have a use case to me is astonishing. I mean, they would look at us like we had 3 heads. They wouldn't know what to say. The world has a use case, and it's incredible. And it's, by the way, it's only multiplying with AI and other things. And yes, the investment opportunities are amazing, particularly now where it's out of favor. Everybody's chasing AI, and meanwhile, blockchain is right in front of all of us.
Yeah. Well, I think there could be a connection, right? And the one thing I always pay attention to the stock market. This was several months ago, but there was a fake bomb in front of the Pentagon, right? Or I think it was the Pentagon, and it dropped the markets like $6 billion for a moment. So I know there's some tools out there. I think Jody was kind of alluding to that, where they can like check for the authenticity of the image and make sure that's a real image. And I think with the proliferation of a lot of this AI, I think that's something that is important to have and understand which images are real, or at least have some sort of, and this will be amplified like crazy during this election cycle, I'd imagine, right? You can literally make me say something I never said, right? And it's getting harder and harder to delineate between the two.
Okay, well, maybe I'll try to make you say something you've never said. By the way, Jody, there's a Roman, I think it's a newspaper in Rome that actually did this, and I've got to chase it down online, but I think it was done by Ernst & Young, EY, used blockchain to validate the content as being by this particular newspaper. So it is actually, there's actually a use case of that already. So we chase it down on Google, and it's definitely there. And that's just the beginning. It's going to proliferate.
And as you mentioned, kind of getting into some of the portfolio companies, I'm looking at your list right now. It's every big name you can think of: Gemini, Kraken, Ledger, Circle, Doodles. I won't go through all of them. Yuga Labs, TRM. So you see a lot of these venture funds that you're talking about that are, $100,000 checks and things like that. You guys, I think it's 1.2 billion you guys have in the fund. Is that?
Yeah,
right?
we have $1.2 billion under management. We've got 24 companies around the world, 2/3 of them outside the United States. And one of my roles now is helping the various management teams. I sit on boards or board observers and help the management teams scale the business and develop strategies for it, create synergies among the various companies. Obviously, all of these things help inform better investment decisions and also finding and unearthing new companies. So that's what we do, and that's what I do. And it's so enriching, particularly after 30 years of being either the general manager, the president, or the chief executive.
Yeah, this is a big shift away from some of that, but it's going to spread across all these industries. So, for example, like NFTs, when I went to NFT week in New York, I was able to get a beer and food for free. And I was like, now this is kind of cool. Like I can use this for something. It's not just like a picture I can show my friends and show off. So I'm thinking with MSG, the Knicks could do something, the Rangers could do something very easily where it's like, all right, you own this NFT, maybe you get to the front of the line, or maybe you get to meet the players once a year or something. There's so many different things that artists can start to get into now.
Well, so I'm going to quote Raoul Powell, who I heard this from. Who do you think has more NFTs minted than anybody else in the world?
I don't have the answer for that.
Ticketmaster.
That makes sense.
Yeah.
So to your point, Avi, you put that in my head just a minute ago. I think he said it was Ticketmaster. I'm pretty sure it's Ticketmaster.
Yeah.
Yeah. Another good guy. You ever follow Mikhail Kaku?
No, I should though.
You should write this book down. It's The Future of Physics. It's the one book that just always sticks out in my head, and you'd love it just because it's crazy too, because it was written now probably 10 years ago, but it goes 10 years out, 30 years out, 50 years out, 100 years out. And by the time I read it, it was 2 years old. Half of the stuff had already been done. And I think the future, you're talking about the longevity of human lives and everything like that. That was where I got really excited, was like the future of healthcare. And you'll have toilets where you can go to the bathroom and it will show you your blood pressure. It will show all these things directly in your own house. We're already starting to see some of this with like wearables. They haven't figured out the blood pressure yet, but you know, if Apple can figure that out, Apple goes to $5 trillion company. So it's absolutely remarkable. I think where
Speaking of Apple, physics of the future. Thank you. Just bought it.
There you go.
It's a great world. It's a great country and a great world, isn't it?
It's amazing.
Yeah. Coming from someone that's like worked at JP Morgan, you know, been in New York, been around that like hub of traditional finance. Like, what's the bear market been like for you as you've kind of had to stick to your thesis, stick to your guns? People probably asking you at some point, like, why are you still so deeply involved in crypto, or, you know, talking to your LPs? And, you know, as we see shades of life come up, and you see people like Larry Fink go on and say, hey, I think Bitcoin is going to be a flight to quality, and they're applying for these ETFs. That's a great social proofing for you now, but it had to be tough 3 to 6 months ago when, you know, you're at the bottom of token values and people are starting to be really, you know, big skeptics on the whole viability of crypto.
Well, you know, look, I've got two answers to that. The first one I'll come to second, which is my own personal portfolio, because I've got a point of view on that. But let's talk about the fund. The thing that's really the opportunity really is, you know, 3 to 6 months ago, and probably continuing for a short while longer, where when liquidity is very dear, that's exactly when you want LPs to be giving you funds, and also exactly when you want to be putting capital to work. Unfortunately, it's harder to get people to do it then because there's a lot of fear. And it's not FOMO fear, it's just fear. So one of the things to think about is that's the time when it's really exciting. That's the time where we're very excited to be investing. It's also a time when it's a bit more challenging to get people to go with it. And that's my big fear about the next year, is that we're going to have deals that aren't quite as good as they will have been in the last 3 to 6 months. The good news is there's so much explosion in the overall level of innovation in blockchain and use cases and everything else. I think that will offset the effect of the liquidity shift. But I think we will look back and say the things we bought in recent right now, and probably for a few more months, and the last few months will be really winners. In terms of my own portfolio, I have to say it's decidedly shifted. I, for many years, had been a devotee of what I learned at JP Morgan, honestly, a million years ago, which is the S&P 500, and you want a balanced, diversified portfolio, et cetera, et cetera. I've loved JP Morgan. I use them. They're my bank. They're fantastic. My investment specialists, they're incredible. But I don't do any of that anymore. Absolutely none. If you actually look at what the categories of investable assets that have actually outperformed the M2 money supply, it's very few. Tech stocks, art, fine wine, fine art, fine real estate, fine jewelry, real estate in places like where I live, and crypto's number one by far. Almost at any sort of 5-year frame, it's crypto. So what do I do now? I have in our personal accounts, my wife and I have a block of gold, and we have cash. And then everything else is very long assets. It's crypto, it's high-tech stocks, and that's it. No S&P 500 for me because it doesn't keep up with the devaluation of the dollar.
That's a really good point. You brought up data, like the diminishing value of data over time. Snowflake's a company kind of shifting gear to the traditional finance, since you started to go there a little bit. Companies like that have been skyrocketing over the past couple of years, and they had a huge IPO, obviously, as well. So are you thinking that companies like that are overvalued, would you say, overall right now? Or
No. And this is what's so important about understanding tech stocks and the valuation. And what I mean is, when something is revolutionary or disruptive revolution, you really don't know how far it could run. I mean, how many times have we thought Tesla was done, or Apple was done, or Amazon was done? How many times? I mean, by the way, we haven't talked about this, but up until 2 years ago, I taught strategy finance for technology and media entertainment companies at Stern Business School for 22 years. And by the way, every year we do different cases. And I remember cases where, I remember one of the cases was I did a final exam on Google, which had just come out at $85 at its IPO price. And I said, was this a buy or a sell? And pretty much my entire class of 70 business school students at Stern said it's a sell. $85.
wow.
Yeah.
So the reason I say that, when you have the long arc of history, what you realize is that Snowflake is a great example, or any kind of really high growth new tech stock just coming to market, is essentially a call option. And for those of you, and you guys know this, when you know what causes options to have value, the lower boundary is fixed at 0, and the more variability in the upside, the higher the value of because it's a call option forever. That's what it is. And so it's no surprise that as a stock comes out of the market, and there's a lot of different interpretations about what the total addressable market could be, what the disruption could be. In the case of Tesla, is it a car company? Is it a platform? Is this whatever it is? Could drive the value higher because people have different visions of it. It's very hard when you're IBM and everybody's visions are pretty constrained about what the outcome is for you to get that kind of a multiple. But the new, on with the new.
Just mentioned Tesla, so I got to bring this up, and we can edit it out if you want. But I'm sure you saw the Elon Musk yesterday, where he maybe he bit his tongue afterwards, but he basically told advertisers to F off, right? And I think he said that in jest, saying like the whole basis of what I'm looking to do is create this. He calls it like the global town square, basically. Where do you think like these social media, and maybe not just X as an example, but even Facebook, and this proliferation of giving everyone a microphone, right? Where that in the old town hall, a crazy person out in Times Square right now, maybe 10 people can hear if they scream something. Now, 1 million people, billions of people can start to see some of that. So shifting gears a little bit to where you think some of these social media companies, you think they're going to be sticking around, or is the government going to stick their noses into what's happening?
So the last part of your question, thankfully, was the easiest one. So I'll choose that. In fact, as you know, the courts have already spanked Twitter for the relationship, however you want to describe it, I'll leave it to you, between the White House and Twitter and the management of that sort of information during the COVID situation. And it wouldn't surprise me that you're going to see more and more of our US courts, federal courts that is, increasingly emphasizing more free speech, less government intrusion in a variety of ways. So I think that will be, so that's why I say that was the easiest part of your question. I think that's a definite theme, and it's going to grow. The more troubling part of your question that I think is harder to tackle is, what is the effect of giving anyone a megaphone to 1 billion people? And by the way, we could even take it a step farther, the conversation we had a little bit ago, giving a machine the opportunity to have a megaphone for 1 billion people. Think about that. I mean, that's actually one level. I mean, you don't even have a sentient, ethical, moral actor there. You don't have agent. What you have is a machine. What I think about that is, it's pretty hard to reach 1 billion people. And interestingly, your likelihood of reaching it is either through doing something remarkable, and it could be horrible. That could be part of remarkable, and it could be extraordinary. What we need, though, is better human filters and better understanding. And then, frankly, honestly, we need to know greater authenticity about what the source is and the verification of it. It goes back to, Jody, what you were saying earlier, which is, we need to know what's real and what's not. Mm-hmm. And there is a way to do that, but we need to do it, and we need to do it quickly, because the ability to lie or make stuff up or put words in your mouth, Avi, for lack of a better way to say it, is vastly outstripping our capability to know whether it's really you.
And we've seen this a lot with most recently with Gaza and Israel, and we've seen it now with companies. I think we're going to see a lot of it, as I mentioned, with the election coming up. And I hope that there is freedom of speech. And I think it's so important.
I'd like to say a word more about the interview you referenced, because I didn't actually directly comment on it. I would actually like to say something about that.
Yeah.
I want to take you back. I want to keep that interview, which Andrew Ross Sorkin is a fabulous interviewer, and he did an amazing job with Elon Musk. I want you to take that interview, which if your listeners haven't heard it, they shall see it, and play the tape back a year when Andrew sat Sam Bankman-Fried down and did a similar kind of interview. Yep. Okay. Now, the reason I want to say that is what's amazing about both of those interviews is you can't yank your eyes away. But one is an extraordinary moral train wreck, a disaster, like everything you would not want your kids to be. But crucially, got there by the most gilded possible path. And the other one came from a very difficult path, if you believe what he actually said in the interview and what Walter Isaacson's written and all the other stuff. You can't rip your eyes away. But it's not because it's a car wreck. It's because it's so absolutely startling. The way his mind works, the way he says things, the way he has no filter, the way he talks about the storms in his head, and those storms are going to put us on Mars. Mm-hmm. And so I would say, in a real sense, yes, we could focus on his comment about advertisers, and it was obviously colorful, and he's unfiltered, and I don't think Linda Yaccarino had a particularly good day today. Whatever, it's fine. But when you contrast that interview with that and that person overall, by the way, I'm an investor in Tesla. I'd love to be an investor in SpaceX and all the rest, with the other one, which is, by the way, smooth talking, very, very accessible interview, and a moral zero. It's pretty shocking. So give me Elon Musk anytime, even unfiltered.
I agree. I got in a battle with one of my friends. He kind of hates Elon Musk, and I'm like, you hate him or love him, he's done phenomenal things for this world. Like the Tesla example, they're selling more EVs than the rest of the companies like combined right now, and then they're attacking him for not being so green, right? And so I think it's the freedom of speech that the government seems to be attacking, and Elon represents someone that has too much money to necessarily care. And the prime example, he's like, I don't care about these advertisers. Of course he does down the road, but he can float Twitter for quite a few years right now on his own if he truly believes in that. And I think we're coming in this dichotomy of humanity right now, and it's been pretty divisive as America. Like I saw on Twitter today that people are selling their Disney shares now, and people are now canceling their Disney Plus. And with the election coming up, hopefully we can find some common ground and be the United States of America again, because it's been really troubling to see, and not just America, it's throughout the world right now. There's so much arguing, and people are hating people they don't even know on the street. It's just troubling to me.
I just was in the Middle East. I just flew home from Abu Dhabi 2 days ago. And, when you're on the middle, it's a 15 an hour flight to Florida, 15 and a half hours, whatever it was. And, I would do some sleep, and then I would do a podcast or two. And so I actually listened to a podcast with Peter McCormack, What Bitcoin Did, a very interesting podcast, but with Robert F. Kennedy Jr. Now, so I am not a RFK person, not my thing. I am not a Democrat. And I had low expectations for what this was going to be. I'd heard a lot of things about him with vaccines and all the other stuff. And but it was all not educated. It was just noise coming into me over many, many, many years. And I actually listened to him. And I have to say, when you hear people in their own words, rather than the noise around them, sometimes the most extraordinary things happen. In his case, and the reason it made me think of this, Avi, was something you said, which is he started with the paradigm of the famous speech that Eisenhower gave about the military-industrial complex. And what he goes on to say is what also was part of that was pharmaceuticals and all the other things. And I wasn't really tracking with this, but one thing he did say was that control is a key objective. And what he's about is trying to make sure that human beings have freedom of action and freedom of agency in a world where, honestly, it's getting harder because to keep everybody, to keep everybody aligned the same way, you need more control. And so I understand perspective on why you need more control, but I also understand he's almost like a siren song about, hey, we've sort of jumped the shark here a little bit. Liberty has been forgotten in some sense. And I thought it was particularly powerful points he made. But the reason I think of it is actually because of what you said, which is freedom of speech, even very difficult speech, even speech you don't want to hear, has value. And it has value wherever you are on a political spectrum, but sometimes it's really hard to see that when you just don't happen to like the speech.
Yep.
Tad, I know we're like coming up on time, but wanted to, and it definitely takes some time on the non-tech side. So not crypto, not blockchain, but what I'd say art has you excited now? Like, are you looking at the classics? Do you have certain like contemporary artists that you're following? When you want to shut off all electronics, and I think everyone, especially in the crypto world, needs to do that more. What is your way of shutting off? Is it going to see particular artists, or is it, searching for certain type of paintings? Like, what is?
Oh, well, art for sure. But interestingly, my latest fixation is actually a digital artist, Avi and Jody. So, but I will set that aside. Even though I pulled out my phone and bought the book Physics for the Future that you just recommended, Avi, Jody, to your answer, I actually am reading an old school paper book, which I almost never do. It's enormous, and it's a book that both you two need to read, and every single person that listens to your podcast needs to read. It's called Godel, Escher, Bach. It's the famous thing by Douglas Hofstadter in the 70s. It is the base principles of all logic and AI, but it's Johann Sebastian Bach. It's Godel, it's Escher, the prince and the artist. It was a Pulitzer Prize winner. It was written in the 70s. It was refreshed 20 years later. So the entire AI crowd reads it or read it at one point. It's an amazing piece, but it's forgotten because it's 40, 50 years old. And so that's what I'm reading right now. And it is an incredible, and by the way, I'm reading it old school.
Yeah. I like
Audible. What do you mean reading it old school? Is that
remember, it's logic, it's philosophy, it's literature, it's art, and of course mathematics.
No, I love it.
Douglas Hofstadter, correct?
Douglas Hofstadter. And by the way, when you Google him and Google him, AI, it's an incredible, I couldn't recommend it more.
Dad, I feel like we could talk for like another 5-6 hours. This is the first podcast. I was just thinking in my head, I'm going to probably put on Block Fuel and Pound the Table because we talked traditional stocks, we talked art, we talked about your background. There's just so much here that we uncovered, and I can't wait till you're back in New York. We can get together again and just continue this conversation.
I love it. Well, look, you guys are really nice to have me. I am a big fan, and I thank you for having me on.
Awesome. Thanks so much, Dad.
All right. Bye-bye, guys.